I'm going to be doing my workshop today on sector rotation. I did have a request for that from the survey notes. So always be sure and fill out those surveys because we do read them. And I actually took someone's advice and decided to do sector rotation. So let's first start off with what we're going to talk about. So obviously I'm going to tell you about the definition, and then I want to go through the different ways that you can look at sector rotation. And then depending on how much time I have left, we'll go ahead and I'll show you how to scan a sector or sectors with some of your favorite scans. So let's go ahead and first take a look at what is sector rotation? Well, sector rotation is sort of the typical movement of relative strength among the various sectors that we do have. Okay, so there's the 10, 12 there. We started with, I think, 10, now we're at 12. But we'll go through and look at which ones are the aggressive sectors and defensive sectors, because depending on which one is doing better than the others relatively to the market, that really gives you an idea of where the market probably is headed. For example, if you have a rally on a defensive sector or sectors, if that rally is being carried by those defensive sectors, then you're looking at a sign of market weakness more than likely. And when you get those rallies that are led by the aggressive sectors, usually that's a really nice sign of internal strength. And a lot of times it's going to confirm that you will continue to see higher prices. All right, so let's look at what sectors are what. At this point, what we have determined, and things are constantly shifting, but at this point, we consider the aggressive sectors, number one, to be technology. And I think that's a pretty obvious one. That's where you have, all of your Amazons and all of those groups and stocks that really tend to lead the market when you're going through them. So consumer discretionary would be the next one, also known as cyclicals. That's, of course, your extras. The consumer, when they have extra money, that's what they spend their money on, are these consumer discretionary restaurants and bars, or the department stores and that sort of thing. Communication services actually was pulled from mostly from the technology area, that sector. So it tends to also be on the aggressive side. A couple of others that you may not consider are materials and energy, and those are sort of right in the middle. Financials as well. You sort of see the change when they start to go through. Well, I'm going to get there. I'm getting ahead of myself. The defensive sectors tend to be your consumer staples. This is your toothpaste and beer, which apparently is a consumer staple. And those are the ones you're going to find Coca-Cola in there. These are the ones Procter & Gamble. So these are the ones that everybody's going to always need. Utilities. You're always going to need utilities. You want to have, air conditioning or lights in your house. Healthcare, everybody's going to need healthcare. Real estate tends to be an area that is considered defensive as well. Now, I do want to say that healthcare, and Greg Schnellman, mentions this in his book, StockCharts for Dummies. If you haven't gotten that, that is in the StockCharts bookstore. But one thing that he noted is that with healthcare, it used to be highly defensive, but now that we're starting to see the biotechnology area in there, some of the pharmaceuticals that are in there, they're kind of a more aggressive. Let's face it, we watch those biotech stocks moving up and down all the time, very volatile. So while healthcare is still in that defensive area, it's not quite as defensive as it used to be. So let's look at the actual rotation and what it tells us. So I'm going to start over here. Now, when you're looking at, and this is really telling you what's going on with the economy, where you are as far as the strength of the market based on the cycles that you go through. So technology and transportation, this area, you start to see the cyclicals coming into play, late contraction, early expansion. But these are the ones that start off that really nice rally. Then you start to move into the industrials, You've got basic materials and energy that come in through the middle of the expansion. Then now we're going to start to see a little bit more defensive areas as we get later into the market rallies. You've got healthcare starts to lead. You start to see consumer staples and utilities leading as the market's starting to contract. And then the next ones you want to start watching, we're really paying attention to that financial services sector, because that's sort of the next area that you want to see growing, so that we can get back here to the expansion phase. Right now, we're seeing a market that's rather volatile and has, not, we're seeing the rallies a lot of times on the backs of these consumer staple stocks. We want to start seeing movement in the financial sector and then move on into the consumer cyclicals. Now this, you can find it on StockCharts.com. If you just go to the chart school and look up sector rotation, you're going to find this, and you're also going to find it beneath the perf charts and the other charts I'm going to show you when we get further along. But this really gives you the same sort of feel that that other one did. However, this one does include, communication services. Well, we're going exactly the wrong way here. All right. So as you can see, technology and consumer services, discretionary, all of these are listed here on the left. Those are your aggressive sectors. And then notice you start to move into those more defensive areas as the market tops. And that's what we're seeing right now. Staples, utilities, healthcare, real estate, those are all starting to lead, but the market is topped and it is starting to move lower. Why I want to see financials start to do better is because that's when we're going to start seeing that move, hopefully to the upside, when we start seeing those areas growing. But this is a great chart to give you a feel for what's going on in the economically in the US, but also looking at what the stock market's doing. And it gives you an idea of, and one of the reasons you want to study sector rotation is a lot of times it's going to help you determine which part of the market you are in, what part of the rallies you're in. Is there internal strength? Is there internal weakness? And you need to pay attention to that. But it also helps you determine which areas you may want to trade within. Typically, the market's moving lower. You may not want to be in the market as deeply, but if you are in the market, you may want to spend more time in the more defensive sectors of staples and utilities, like I said, real estate. This is actually a picture I took just before we went on air. And as you can see, we are rallying today, and we are rallying on two of the aggressive sectors, discretionary and technology. So that's really kind of confirms this rally as a little bit of a stronger rally, just because we're seeing the aggressive sectors leading it. However, right behind that are three defensive sectors. So you have to temper your excitement, I guess you would say, based on that we're really seeing kind of a, in general, but all of them are moving in a similar way. Now, the other thing you can note is our StockCharts technical rank. I did not sort on it, but you can see which ones are leading right now, which ones have the highest scooter value. Look at, we've got 97, 94 for real estate and utilities, 93. So who has been the strongest? Who has been leading this rally? All of these defensive sectors are the ones that are leading. And again, that was a clue that we were starting to see the market topping, and that's also a clue that there's still some weakness maybe that we have to work out in the market. Now, there are a few ways you can look at sector rotation. I just showed you one, looking at that sector summary, but you can also pull up a perf chart. This one is from 2003. This was an example that was in chart school. I decided to put it up here because it just fit on the chart very well, but I will give you some real-time looks at a performance chart, but it tells you within that period how what the percentage gain or loss has been on that in relation to the S&P 500. And so you can see that relatively we're seeing the strength over here in discretionary technology, industrials, and materials. And those are your more aggressive sectors, of course. And then those are the ones that are sort of your movement into materials, industrials, that's leading you into the next phase. So, an interesting setup. There's your staples and healthcare and utilities. All of these are not doing as well. And again, these are your defensive sectors. So during this time frame, you could make the you could analyze it and say that, okay, all these aggressive sectors are leading. That should be confirming the rally that's starting. All right, relative rotation graphs as well. And Julius de Kempener, who is the founder, creator of RRGs, we are the fortunate home to them on StockCharts.com. But what he does is using the benchmark of the SPY, you can get these, hold on just a second, I need a break here to... Okay, I don't want the frog in my throat. All right, so relative rotation graphs. These are, and it actually is literally showing you a rotation of these sectors and where they are in relation to the benchmark, the SPY, which is your center point here. So as you can see, as this is current, I took this picture also right before I went on air here to discuss this. And as you can see, here's your healthcare. It is in the improving sector, but it is moving toward the lagging or weakening area. Which ones are starting to pick up strength? XLC, the comms sector, it's now leading. And you can see it's continuing to move in that northeast direction. That's in a more aggressive area of the market. So seeing that rising in the proper direction, that's good. Look at XLK, also rising and starting to get into the leading category. That's, again, what we want to start seeing are these more aggressive sectors moving into that leading category. Look which one is losing a lot of steam. XLP, the staples, while they are in the leading category, they really are starting to head toward that area, toward the weakening quadrant. So you can make some assumptions, take your analysis to the next level by using the relative rotation graph. All right. The next one is using candle glance, and I adore my candle glance style. I will show you how you can set it up real quickly when I go give you an example. But I have my candle glance style to set up to see the 20 and 50-day EMAs and to see my price momentum oscillator on the bottom. So I get to see not only the momentum portion of price, but I also get to see the price trends using the 20 and 50-day EMAs and where they are in relation to each other. So looking at this right off the bat, which ones have the 20-day EMAs below their 50? Well, industrials have been suffering. Materials, trying to make a comeback here. Some of that could be attributed to gold having a pretty great time lately. But we can see that energy showing a 20 below the 50. Financials still have that 20 below the 50. Healthcare has started to decline, and we saw its 20-day move below the 50. So as far as price trends go, your areas that are stronger, which ones have the price trends going the correct direction? Technology right now still has its 20 above the 50, albeit just a very small margin there, but it still is. Staples, look at the margin between the 20 and 50-day EMAs. That's telling you there's some strength just by looking at the price trend. Real estate as well, look at that nice margin between the 20 and 50, and you can see the nice rise that we're getting there. Utilities, again, another defensive sector. The 20 is well above the 50-day EMA. So 3 of the sectors where we're seeing some really good margin between the 20 and 50 to the upside are utilities, real estate, and staples. And those are your defensive sectors. Now, what's going on as far as price momentum? And I look at the price momentum as more of the EMAs, the moving averages, tend to be a lagging indicator. They tell you what's happened, not necessarily what's going to be that well. So I like my PMO because I can measure momentum and then see where the strength is building in each of these sectors. And as you can see, we have strength building in healthcare. We're getting ready to get that crossover. Notice where we already have crossovers to the upside: utilities, real estate, and staples. So momentum is continuing to be on the side of these defensive sectors. That tells me there's still a lot of internal weakness going on in the market. So despite rising prices, today, at least when I looked last, we had some rising prices. They're coming on the backs, as we say, of those defensive sectors, and that should give us some pause. But just by looking at this, we can see which ones are starting to pick up steam, which ones are starting to fail a little bit. Excuse me. Industrials, materials, you can see those PMOs are flat or are actually turning down. I like the fact that we're seeing on consumer discretionary that move to the upside as far as the momentum goes. So we might be starting to see some improvement in discretionary, which of course is one of those aggressive sectors. Still rather flat for comm services. Technology, we are starting to see a little bit of a move to the upside, and it has maintained a lot of its upside trend, with the 20 still being above the 50. So there is a lot of information just on a candle glance. I think it's probably obvious now which one I like to use for sector rotation analysis. It would be my candle glance, mainly because I can see those indicators that are important to me with my decision point analysis. Another way you can look at the sectors and what's going on with rotation is using price relative. And this is a chart that's similar to what my partner Tom Boley uses quite a bit. And you can look at how the price relative of consumer discretionary to consumer staples. So probably one of the most aggressive areas of the market versus one of the most defensive areas of the market. So when consumer discretionary, that aggressive area of the market, if we're starting to see relative strength there, we tend to see a confirmation and a rally continue. When we start to see some failure in that price relative, of course, back here would be a really great example where we lost that relative strength area of support, kept moving down, and that was telling you that consumer staples relatively were getting stronger than discretionary, and that's a warning that the market is showing some weakness. And here's another great example of that. Relatively speaking, you had discretionary on the rise when it started to flatten out with this price relative, and we started to see it turning back down. Again, another sign that there was some problems. And look at where we are right now. We had this decline, and of course, staples started to do much better than discretionary, and we actually have made another low that we haven't seen. It went past our May low as far as the price relative is concerned, but it looks like we're starting to see a turn here. We'll want to look and see if we can continue to see a rise in this particular relative ratio, and that would give us a little bit more of a sign that the market internals are starting to get stronger. All right, so I'm going to move on to scanning a sector or sectors. I think those are quite good to look at. And right now, let's go ahead. I'm going to show you, I'm going to go right to my scanning workbench here, but you can get to your workbench if you are a member of StockCharts, of course, right here. You can get to that advanced scan workbench. And what I thought I would do is take one of my scans that I end up having. Let me see here. Let me get this back. Okay, I was going to take one of my scans where I get a large number of results typically. So here is the one that I usually get a large number of results. I'm looking for bullish EMAs, meaning I like to have the faster EMAs on the top. So you can see that right here, the 20 being above the 50 being above the 200, because that tells me right off, of course, that there's it's in an uptrend price-wise. I then like to see my PMO rising for at least 3 days. I want a scooter between 70 and 80. So I'm going to run this scan, and this is looking at a giant universe. I want US stocks that have a simple 20-day simple moving average of their daily volume to be 300,000. So we're talking about a lot of stocks to get some results for. So I'm going to run the scan. And we had 67 results. You know, I had somebody send me an email and said, do you run the scan every day? And because sometimes I end up getting duplicates, I run it every day. Well, I do not run it every day. I tend to run it maybe once a week, maybe every 10 days to 14 days, because I don't trade that often. So I'm not really looking for this is giving me trading ideas and trading opportunities. But yes, if you run it every day, you will probably get the same results, some of the same results daily, but you're going to have some that fall off and some that are added. So, you know, you have to determine where you want to really pinpoint your searches. So this is one way to do that, and that would be filtering it based on a sector or sectors. So at this point, you know, we're looking, and I was interested after seeing those particular candle glances. I was interested in the defensive sectors in general. So I'm going to do first I'll take a look at consumer staples, and this is how you can add a sector. It's right down here in the components. So I chose staples, but you can even narrow it down to industry groups if you'd like. I'm going to go with the consumer staples. That's what we'll start with, and I'm adding that. Now, it always adds to the bottom of your scan, just FYI. So I'm just going to take this to the top. I like to give the scan engine a break by putting in some of the easier or you know, more general scans here, or scans, scan code right up front. That's why I say right up front, stock US daily volume. So it immediately, the scan engine can narrow something down to a pretty good amount of results and then move from there. So I want to go ahead and put in that it needs to be in the staples sector. Now you notice this little X. That's because you can't start a scan with an and. So I'm just going to take that one right out there. And now let's run it and see how many results we get. So we had 67 before, and now we're going to have a little bit less than that, 6. So then you can take a peek at each of these consumer staples. And then before I wrap this up, I'm going to show you one other thing you can do on that is if you want more than one sector. So maybe you want to see all of the defensive sectors in here, or a couple of them. So let's add utilities. Let's do that. But I want to show you a little bit of a trick here because it's very important to know. So I'm going to add that I want it to maybe be in the utility sector. So again, I like to take these and put them at the top. So I'm going to add that right here. Well, okay, this is a problem with the code, and it's not going to tell you this. Can a stock be in consumer staples and in utilities at the same time? No. So in this case, because I'm adding another sector, I'm going to put in an or clause. That way I won't get 0 results. Run the scan, and there you go. All righty. Okay, so that's sort of the basics of sector rotation. I wanted to give you the takeaways for this, the importance of sector rotation. It really helps you determine what phase of the market or even the economic cycle you could be in. The aggressive and defensive sectors are very important to know the difference between those. I showed you the tools that you can use to envision or see the rotation. And then I did go ahead and show you how to add those sectors to your scans. So that completes my workshop. Why don't we go ahead and take a look at the poll and what you guys use as far as looking at sector rotation. I can tell you that when I took the poll that I picked all of them. I didn't use price relative because I don't use that quite as much, but I guess if you are, you know, technically when I'm looking at it, I'm comparing price relatively to each other. But sector perf charts, I don't really use those so much, but I definitely use that RRG, the summary, sector summary, and the candle glance. How about you, Tom?
Well, I'm surprised that some of these don't have higher percentages, especially sector summary.
Right?
I start with that every morning. That's the first thing I look at when the market opens. Just gives me a real quick and dirty analysis as to what's leading, what's in favor, what's not. Just gives me a feel for the market for the day. So that's the first thing I start with. So that would be 100% for me. Only half of you using sector summary is kind of surprising.
Right?
Relative rotation graphs, I think, is awesome. To me, it just takes a little bit more work. I use them, but I have to physically go in and select. I mean, the sector summary is all it's default. I just use it. I click on it, and boom, it's so easy. And there are some things on RRG I think that are already pre-selected as well that can save some time. But I guess maybe it's more habitual than anything that I just really have gotten into the sector summary. But between of those two, I would say sector summary would be my first, RRG would be my second, and for me it would be price relative. I use that a lot as well.
Right. So for me, I would say number one, sector summary, number two, candle glance, and then the RRGs. So if you do want to set up your own candle glance chart style, just set it up the way you want to look at it in candle glance, and then just save it as candle glance, and that'll show up every time you do a candle glance. So pretty important there. All right, well, I thought that was interesting, and hopefully that was helpful. If you have any other questions, Erin H at StockCharts.com, and you can reach me with your questions. I'm happy to answer them there.